market fund of fund. Should I invest in this NFO? What kind of returns it can give me? Let us look into it, analyze it, evaluate it to understand whether this is suitable for you or not. Hi, holisticinvestment.in. We help individual investors like you to take right financial and investment decision so that you can reach your financial goals faster and smarter. To analyze this fund, we should have some basic understanding of the key features of this fund so that we can. Let us understand the key features of this fund. NFO is open until 18th February 2022. This comes under the category of Equity International Open-Ended Fund of Fund category. That means this will invest in other funds which will invest in international equity. The benchmark index is CRSP US Total Market Index. Load is nil and entry load is not applicable. The investment objective of this fund is to provide long-term capital appreciation. Because it is an equity fund, it will provide long-term capital appreciation by investing in the units of Vanguard Total Stock Market ETF or Schwab Index Fund. In these two funds, Navi US Total Stock Market Fund of Fund will invest. To understand about this fund of fund, we have to understand the strategy of this fund. This fund will follow the passive investment strategy, which will invest in two passive funds, which are Vanguard Total Stock Market ETF and Schwab Total Stock Market Index Fund. Right? Both these funds follow CRSP US Total Market Index. So we have to understand a bit more about this index because both the underlying funds is going to mimic this index. So understanding this index plays an important role. It is a very well diversified and it has exposure to multiple. Fourth, the median market capitalization of $1.4 billion. Right? It tracks almost 99.5% of US stocks, ranking from small cap stocks to giant stocks like Microsoft, Apple, etc. Right? What is going to be the investment flow? Investor, you invest in Navi US Total Stock Market. In turn, they invest in Total Stock Market Index Fund. In turn, these two funds, these two underlying funds will mimic CRSP US Total Market Index. Take Vanguard ETF and evaluate that you get better idea. Vanguard ETF, again, it is a passively managed index fund. This fund has got a low expense ratio of 0.03% only, which is actually a good news for all the investors. Right? This fund has got to technology, consumer discretion. These are the top three sectors in this ETF. They have stocks like Apple, Microsoft, Alphabet, Amazon. Based on the weightage, we have given you the details. Now let us look at and evaluate the next underlying fund, Schwab Total Stock Market Index Fund. This fund tracks the total return of the entire US equity market. The asset under management is around $99 billion. The fund is compiled of small and mid-sized companies. Microsoft, Amazon, Facebook, Alphabet, that is Google, Tesla. Higher exposure to technology, healthcare, consumer discretionary, financial services, and communication services. So it is a diversified index. Now we have analyzed this fund of fund. As we have understood the basic structure of this fund, We have also understood the underlying two index funds and also evaluated the underlying benchmark index. Now we have got clear framework of this fund. We can start analyzing this fund now. First, I'm going to list down the findings in our research which are in support of this fund, the advantages of this fund. Being an equity fund, this has got the potential to beat inflation and give you inflation adjusted return in the long run. Short term, this fund will be definitely volatile. This is the first Indian fund to give you exposure in Vanguard ETF. So if our Indian mutual fund investors who are willing to invest in Vanguard ETF, then this is a good opportunity for them. This fund has got the potential to safeguard you against the depreciation of rupee. How? Because whatever the money you are investing, that is getting converted into dollars and invested in US stocks. So this fund will have two types of return. The first type of return is the US stocks in which this fund invests is going up, and because of that the NAV goes up. So it is a first type of return is from the underlying stocks in US. Second type of return is the money is invested first in dollar and then invested in US stocks. If US dollar appreciates, again it will reflect in the NAV. This is the second type of return. Currency appreciation is also another return for this fund. This fund will have two return components. This fund is suitable for an aggressive investor looking for exposure to the US equity market. Why am I saying this is suitable for only for aggressive investors? I will discuss that in the cons of investing. When I am listing about the drawbacks of investing, I will explain in detail. Will be a good chance for investors willing to add international funds to their portfolio, and this fund eliminates the risk of stock selection. Fund manager bias is eliminated in this fund, right? Because this fund buys the entire index without analyzing the underlying stock. So if the fund manager takes a wrong call and because of that this fund is not going to do well, those chances are eliminated, right? So there is no fund manager bias or stock selection risk because it is an index fund. And expense ratio is expected to be low, being a passively managed fund. International exposure brings healthy diversification to your portfolio. International exposure can bring more stability to your portfolio because it is a developed and matured market. It can bring stability to your portfolio. What are all the cons of investing? The potential drawbacks. I'm going to list down the findings of potential demerits about this fund from our research. Short-term investing is not suitable for this particular fund because this fund is going to invest in international equity. This fund is not having any track record because it is an NFO, no track record. So how they are going to maintain low expense ratio, we have to wait and see. That is why this is the reason why we said it is suitable for aggressive investors, because existing investors can choose low cost RF or an international fund with a low expense ratio, an existing fund. This fund has got geopolitical risk and macroeconomic risk of US. Whatever the political climate in the US and macroeconomic climate in the US can affect this fund. Currency risk and additional risk brought by this fund to your portfolio. Yeah, I told you rupee depreciation will be offset if dollar appreciate in this fund as an advantage. Suppose if rupee appreciate, then this can be a disadvantage to this fund. So this fund brings currency risk to your portfolio. This fund most likely to underperform the benchmark index because they have to charge fees, expenses, trading costs, and close to 5% of the portfolio have to be kept in liquid assets. And one more important thing is tracking error can be another challenge. So because of these reasons, this fund can underperform the index. This fund is not able to take any proactive step because of market fall. So if there is a market fall in an active fund, the fund manager can proactively move from one particular set of stocks to other set of stocks. This fund will not be able to do it. Also, after the crash, doing any course corrections in the portfolio is not possible. Simply, they have to mimic the index. They have to replicate the index simply. Because it is an index fund, this will not generate any alpha. This fund will not deliver market beating returns. In an actively managed fund, the fund manager can pick and choose best of the best stocks from the index. So there's a high probability for an actively managed fund to outperform the index. Here, there is no such possibility. This fund blindly buys the entire index without doing any analysis of the underlying stock. They don't do any analysis. They don't look at the balance sheet. They don't look at the profitability of the underlying stock, how it is going to be perform in next 5 years, 10 years, 25 years, after 25 years, whether this particular stock will be there or not. Nothing is checked. So these are all the disadvantages of this fund. What is the final takeaway? Do we have to invest in this fund or do we have to avoid this fund? If you are a conservative investor, first choose to invest in existing Indian equity funds first. That can be part of your core portfolio. If you are an investor who is looking for equity exposure, then consider investing in existing international funds, which has got a good track record of low expense ratio and less tracking error. Right? Then, obviously, this fund is not suitable for investors who's looking for market beating returns, who's looking for dynamic fund management, active fund management, and obviously not suitable for short-term investments. Aggressive investors who want to invest in NFOs on an experimental basis, then they can choose to invest a minimum amount in this fund. If you have any further queries on this fund or any other investment options, feel free to book a free appointment with our financial planner. The registration link for the free appointment is given below this video in the description box. Will you be interested to attend insightful investment webinars? We organize regular insightful investment webinars. The registration link for our next free webinar is available in the description box of this video. Please register, make use of the next free live webinar, and that can help you create wealth. Not the least, please subscribe to our YouTube channel so that you will not miss any of our future videos. If you like this video, like our analysis, please give a thumbs up. If you have any friends to whom this analysis will be useful, please share it with them. Thanks. Bye.